Hey everybody, Brian Shannon here from alphatrends.net. Today is Friday. It's May 2nd, 2014. Let's take a look at this market here. We had a positive week for the markets. Nasdaq was really the leader here with a 1.5% gain for the week. We're still down year to date, only slightly, and the S&P 500 back up 1.8% now. Semiconductors basically flat here. Bonds had a good week as well, up 1.2%. So let's take a look at the charts, see where we are and where we have the potential to go from here. As we noted in the S&P 500, we had been kind of searching for support right down near this conjunction of the 10, 20, and 50-day moving average, and the market did manage to continue higher off that level. So we overtook the 5-day moving average on Tuesday, and we stayed above that 5-day moving average throughout the week. And as I had said to subscribers, even going into the Fed meeting, what we wanted to see basically was this 187 to 187 and a quarter level hold as support. That when we go into an event like the Fed meeting, a lot of times there's a lot of volatility, but as long as we stay focused on key levels of support, we continue to give the benefit of the doubt to the buyers here in the S&P 500, as we are still obviously in a longer term bull market, and on the daily time frame we're within a few percentage points of an all-time high in the S&P 500. It doesn't mean we can just go in and buy anything at any time. We've still got those momentum names which have been a disaster, continue to be traded very heavily. The Nasdaq was again, it was up a little bit here, but we're coming into a prior band of resistance right in here from last month, and that basically would be about from 88.25 down to about 87.75. So this is our band of what's been resistance and still has the potential to be so, and we've got that declining 50-day moving average in there. So that continues to give us a lot of reason for concern here in the Nasdaq. Longer term, that is the weekly time frame, we're still in a uptrend, but as we come down and test the longer term moving averages like the 200-day moving average, and then we have the 10 and 20 below the 50-day moving average, it says that we have indecision here, and that's possible distribution. I'm not going to say that we're making a market top here. There's really no evidence of that yet, but you can take a look at ominous signs like a left shoulder, a head, and this possibly being a right shoulder. So next week, if we're unable to get back above really 88 to 88 and a quarter and hold above that level, then we want to become very defensive. But for now, it's kind of a little bit of a mixed market. Intermediate term, we do have a rising 5-day moving average, so we're going to give the benefit of the doubt to the buyers. And as long as we hold above 87 to 87 and a quarter, then we'll look for the market to try to continue to move higher, but being aware that there's the potential for this larger area of resistance here. So it's a time to be slow with your commitments to the market. Let the trade set up a little bit better, and then listen to what the market says, whether we're going to continue to try to move higher or if we're going to push back lower and complete that head and shoulders pattern. The fact is, nobody knows what's next. We've almost made it through the earnings season here, so that'll be a lot less as far as catalysts coming next week in individual names. The Russell 2000 is also a reason to be a little bit concerned here, as we are finding on this daily time frame. You can see where the 10 and 20-day moving average are acting as resistance here this week. Now we have of course for the week we did finish with a gain in the Russell, only 0.39% though. More importantly though, we've kind of got just a big mess here. Now on the daily time frame, let's just go back to that for a moment. We can see that we're kind of dancing on this 200-day moving average near about that 110 level, and we've got kind of more of a distributional pattern, it looks like here. If we take a look, actually, here's the volume weighted average price year to date. Now this is a 65-minute chart. Didn't mean to switch so quickly. The volume weighted average price since the beginning of the year right now is at 114.47. That means the average person who's purchased or short the Russell 2000 is in a position this year at 114.47. So it tells us that the sellers have control of this market right now in the Russell 2000. Much different than what we see though in the S&P 7,500, where this purple line is the volume weighted average price year to date, and that is down at that important 184 level. So we'll take a look, I guess, at the Nasdaq as well, and you can see that we're just kind of battling that year to date volume weighted average price. It's not meant as a buy or sell signal. It's just another potential level of support or resistance, and just something that we need to be aware of that gives us an insight into the psychology of who's in control, buyers or sellers. So let's go back to that Russell 2000 for a moment. We can still see, we'll take a look at a 30-minute time frame. We've got a messy chart here. Bullishly, I guess, we want to see the market hold above this little prior band of resistance at 111.5 to 111.75. If we can hold above that, then this market has the potential maybe to continue to move back up. 113, you can see it's tried to fill this gap over here but was unable to. And back to the daily time frame again, you can see that we've got the potential for bigger resistance up near 115 in that. So it's very difficult to make a strong commitment to this market, long or short. You could actually look at this the last few days as maybe a bearish flag that we're going to break down below. What I would say though is when it's this confusing as far as what the trend may want to be, just focus on the levels of support and resistance. We should find support at 111.5 to 111.75. If we break below there and really hold below 111, then it looks like the Russell may continue back down once again. So just very non-committal at this time as far as what the market is really trying to tell us here. The semiconductors, again, they had a slight gain this week, 0.02%. So they're basically flat as the market tries to find support near this 50-day moving average. You can see we've closed below the 50-day moving average 3 of the last 4 days, 4 of the last 5 days, and we have that 10-day moving average and the 20-day moving average curling lower. So when we look in here at the volume weighted average price year to date, you can see that it's right here at $43.80. And realistically, when we go back, we'll take a look at let's take a look at this 65-minute time frame. This has been the area of support for the semiconductors this year, is basically 43.75 to 44, and that's further an important area because we do, of course, have that 43.80 as the volume weighted average price year to date. Now, longer term, looking at the weekly time frame, still clearly in an uptrend here. So it's hard to become all at once bearish on any type of market, but this has been an important area here, down near 43.75. So let's see if the market can hold up next week. Ideally, we'd like to see it hold this 44.20 level, but it doesn't look very strong, and we did have a lower high today, so it's not giving me a lot of confidence that the semiconductors are in fact ready to continue to move back higher, and that's okay. They can rest here. If they pause and correct through time, that's a good thing. Otherwise, if they break down from here, perhaps we're going to see them down down at maybe 43, perhaps a little bit lower than that. And the financials, which were down a penny today, are kind of looking like a little bit of a mess up in here. You look at some of the recent action in stocks like Goldman Sachs, Bank of or Citigroup, and you've got Bank of America. They're just not looking like strong stocks should. Bank of America gapping down and holding below that level. So when we look again at these financials, here on the daily time frame, we tried to rally today but found some resistance up here where we saw selling last week as well. So there seems to be some supply being released to the market up above near about 22.10. And of course, longer term, the weekly time frame, we're still in this longer term uptrend, but we're slowing down. And if we look at the volume weighted average price year to date for this group, it's right about this 21.75 level, and you can see it's kind of acted as support and resistance throughout the year. But it's very very mixed messages here. This has been the important band of resistance just over the last month or so, and that's basically 2205 to 2220. So this is a level that's going to need to be taken out for us to have any confidence that it can continue to move higher. And as far as support goes, I think if we break down back below 2185, then perhaps we start to see another leg lower in the financials. When you look at a stock like American American Express, we can look at this weekly chart. I mean, it's been in this great uptrend, and it's starting to show that same head and shoulders type of pattern here, and maybe another test down near that 200-day moving average, near that 83 level, is something that could help be a catalyst for the financials to break down. Now, if we look at this even on a year-to-date volume-weighted average price, you can see American Express is below that volume-weighted average price, and it's looking like we had this little rally back up to this prior support level. We're finding resistance in here for now between 88 and 88.5, and with it below the volume-weighted average price, it seems as though that this American Express has the potential maybe to, if it gets back below 86 bucks a share, I wouldn't be surprised at all to see it test this 200-day moving average in the next couple weeks. So keep an eye on that. Let's take a look now at Apple. It was up $1 today, and for the week we digested most of those gains mainly, but we did have we came right to this 5-day moving average, which is advancing, and the buyers remain in control. If we take a look at the volume weighted average price since the event, that is since the earnings, right here we can see the volume weighted average price is about 581. I wouldn't be surprised at all to see Apple pull back down towards that level next week. It's clearly in an uptrend. I don't think that unless you're a very short-term aggressive trader that it makes any sense to sell it short, because we've got a bullish looking chart here on the weekly time frame. So I think that instead you want to look at Apple and say there's maybe a better entry place here coming in the next couple of weeks. Twitter this week, we saw they reported earnings, and this stock is came down and made a new all-time low, which it basically 38.80 was the prior intraday low back when it came public, and here we are still in a primary downtrend. A couple weeks ago, people were calling this the ignition candle because it had bigger volume, but again, with a declining 50-day moving average, rallies are going to generally be guilty till proven innocent. If you're going to trade them on the long side, on that ignition candle, as long as it makes the higher highs and higher lows, it's okay to be involved in it. When it makes that lower low and it's below the declining 5-day moving average, and even when we have a declining 5-day moving average, a lot of people bought this stock prior to earnings thinking they were going to be good, and they got burned. The stock gap down, and it remains guilty till proven innocent. We've got a downtrend here. LinkedIn is still in a downtrend. Earnings didn't change that at all. Facebook is, becoming more neutral in here more than anything, I suppose. There's still opportunities. Obviously, when we have this type of indecision, there's a lot of opportunities, long and short. The key is to find them at the low-risk place, not to chase stocks. Somebody asked me today on Twitter about SWHC, saying that I should look at that one because there's 30% short. And I said, in the last 6 days, we've seen the stock rally, 14% or so, uninterrupted. Do we want to buy after these big rallies, or do we want to buy as they're breaking past the level of resistance? And my point is, you always ask yourself, where has it come from and where does it have the potential to go? After a 14% rally in the course of 5 days, it's generally not the best time to be buying. If you are, you have to keep your stops tight. But there are, again, opportunities. If you enjoy this broadcast that I do each Friday, where I take a look at the key market indexes, you can take a look at alphatrends.net, and I've just lowered the price on the annual subscription to the bronze, which is every night after the market closes, we take a look at the S&P 500, the Nasdaq, the Russell 2000, semiconductors, and the financials in the same format that you see here each Friday, and we've got a great deal on that annual price, which I believe was $179. I'm not really even sure, but it's the cheapest it's ever been offered, and I'm going to throw occasional stock ideas in there as well. But take a look at that, and thanks for tuning in.